Let me see, and it's actually trying to head down that way right now. So that would have been my TP and 15500. Okay, so I was expecting for it to come up to come back down. So unfortunately, we didn't get too much of a pullback. The only one that we could have gotten was the 150-100. But let's actually break this down and really look at it and see possibly why some of my levels that I called out were not hit. But let's start at my favorite, not my favorite, but to me one of the most important charts on this whole time frame, which is the monthly. Like I told you in all of the streams, the monthly is the time frame where you look at the market in its whole form. You want to get a feeling and an understanding of the market as a whole. You don't want to catch yourself being stuck on a lower time frame trying to battle whether you want to go buy or sell. You can definitely just find your execution direction on the higher time frames, the monthly, weekly, and the daily. So when we look right here on the monthly, you can see that we had higher highs and higher lows. Nothing has really changed too much. The 7 is below the 65. The market is still look like it's respecting the 65 moving average, which line up with some highs that we had previously in the market. But as you can look right here, this is to me, I've been, ever since the last episode, Head and Shoulders has really been sticking with me for the last couple of days because I've been seeing Head and Shoulders a lot. And maybe it could be common, maybe not. But I can see a Head and Shoulders on this as well. We have a left shoulder here, and we have a right shoulder over here. And we know that a Head and Shoulders pattern is typically a downside pattern for the sellers. And we're usually waiting for the market to break the neckline. But as you can see here down at these lows, whatever is sitting down here at the bottom, this market wants no parts of it. Every time it comes down to the bottom, it just shoots back up the other way. It doesn't really, no, the body of a candle has not really pushed into 120 a lot. The candle might have pushed down, but you can notice a lot of them, the body's pulled back and closed up higher than what the wick was. So let's not get too caught up in that. The monthly, the 7 is below the 65. Lower lows, lower highs. We're going to drop down to the weekly. So when we look at it on the weekly, we can see automatically that on the higher time frames, our moving averages are not going to align. And I told you in plenty of other streams that when the moving averages don't align on the higher time frames, that typically means one or two things. Either the market is still currently retracing or pulling back, or the market has decided to go the other way and is going to begin to make higher highs and higher lows. But until we see those higher highs and higher lows being formed, we would still have to realize we are in a seller's market and that the sellers are still in control. So, the market is coming up to this high area where it has come up here before, but the last time it came up here, it didn't want any parts, and it went, and it went all the way back down to 127. So you can see that we're forming some type of top, either to come down and retest some of these highs, or maybe even this highs that it was just recently broken, because we did get close proximity, higher highs and higher lows being formed and structure being broken. But on a on the monthly time frame, if these highs up here are not broken, then technically that's not a higher low. So we just still going to respect the market and just really look at it for what it is and not what we think. So we are in some high areas where it could be potentially a good selling position, or particularly setting up for a good long buys position. But for me, I'm still going to stay on the side of the higher time frames of down. So I'm going to, keep that in mind. So when I go down to the daily, this still kind of matches up with the weekly. And when I say the weekly, breaking previous highs or breaking somewhat structure. But like I told you, on the higher time frame, like the weekly and monthly, if it doesn't break that shoulder to the left, we have not formed higher highs and higher lows yet. And until that's broken, we're still in a seller's market. So if I'm still going to be looking for the seller's market, I'm going to understand that this big push up was just a retracement, and that we should be looking for the market to be able to push down and, continue down to either retest the high that it broke in, or just to continue in its down direction. but we're just going to look at it for what it is. So we got this high up here, and like I told you, I've been seeing head and shoulders a lot. This is a left shoulder. This is a right shoulder. The market respected this area, and now it's beginning to push down. The market is now broken over the 7 moving average. I've also said a lot of the times too, when the market and the 7 is far apart from each other, they always find some way or some reason to come back together to reunite. The market comes down to either touch it or break down past below it to hit a particular price, and then the market just then continues back up in the direction that it wanted to. So now, with that being said, I think in general, I think I'm going to have to, one, wait for a little bit more confirmation and let the trade come to me. Two, I want to stay on the side of sellers just because higher highs and higher lows has not been formed. So when I drop down to a lower time frame, I won't be taking any personal trades. But for anyone who would are thinking about getting on the seller side or the buyer side, I would have to try to push you to go for the seller side just because it looks like it just makes highs and then it just fumbles all the way down. So for me, I want to wait for a nice little sell opportunity, and I want to see the market come back up to either come and test or touch the 7 moving average, or even possibly come back up to the 65 moving average, and then I would like to bring the market back down again. Let's see how many pips it is from, let's just say, the 65 to the bottom of the figure. That's about 180 pips. That's 180 pips. I'm pretty sure we can get 25, 30, 50, 60 pips out of this if we position ourselves in the right trade at the right time. So let's drop down to the 5 minutes, see how low is low and how high is high. So for me, as a seller, we are at, quote unquote, sitting at high areas, but I would like to see the market come up a little bit higher. So right now, I think for buyers, I think this could possibly be an opportunity for you guys to bring the market up to levels for the sellers to be appeased to hop back in. And that is the only time you possibly could make good money on the buy, because I feel like if you do sit in for the buy for a long period of time, you're going to be going against the trend. So I feel like buyers, you can possibly take the market up to where it needs to go before the sell happens. But I would like to really see what it does in the next couple of candles on this 5 minutes. Let me go to the 15 minute. Yeah, so let me hide these moving averages. So for me, since it's now coming up over this moving average, I want to see it come up into this golden zone and maybe find direct rejection at either the top of the yellow zone or at the top of this yellow zone, closer to this 65 moving average. So what area kind of really sticks out to me out of all of this is a tiny little area where wicks reside and not so much of the bodies. So if I can see prices come back up into this zone up here and find rejection, I would like to take the market back down. So that's where I say for buyers, I think this could be a good opportunity for you. And I think your opportunity can possibly happen on the break of this little high right here, which would be considered the break of structure, of immediate structure. So I would say, wait patiently for the break of this blue zone, wait for it to come back down to retest. So let me give you some levels possibly for buyers. Here are my levels. I think you should possibly hop in somewhere off the 7 moving average. So 149.50. 149.50 is good. And 149.75 and 149.25 are good entries for a buy to bring it up to this blue zone. Sellers, I feel like a good area for us would be 149.90 149.90, 149.80, and 149.70. So I want to keep those areas in mind. But if I had to stay on a side, like I said, it would be short. Let me see if there's anything else I need to say before I get Tiberius's ideas and thoughts. Now that's pretty much it. So Ty, tell me what you're thinking.
All right. So
All
let's
right.
pull it back out to the daily chart and let's analyze that head and shoulders that we were looking at because that's what really popped out for me. So as Darren mentioned earlier, the right shoulder, if we look at that, has come back up to retest the levels that were previously formed on the left shoulder not too long ago. So that right there tells us that this is a textbook head and shoulders. So we know that we should definitely be expecting lower prices sooner than later. Now, all we have to do as sellers and short sellers in this market is be patient. That's it. So all we have to do are wait for prices to come back, test a previous level that used to be a low, see rejection from those levels, and then we can go ahead and jump in. So let's pull it back down to the hourly chart and let's pull back up all the support and resistance. So yeah, I agree with Darren on this one, man. I think overall the best place for sellers to get in would definitely be the blue zone right before 150, so probably around 149 and a half, around that area. I think that's where we should be aiming for. Well, not 149 and a half. That, what price is that right below that zone? That's probably like 149.90 ish, I think.
149.80.
Okay, so around 149.80, those are the prices we should be looking for. Also, notice how those levels also line up with what used to be a previous pivot point, or AKA a reversal area where prices retrace back up to the upside, but the sellers step back in and continue the down move back down. So if we see prices come back to that level and we see rejection, we could definitely expect a little bit of selling. But if prices are able to run past that level, we could definitely look to take prices maybe back up to, I would probably say, the bottom of the wick that forms right at 150 right there. So all in all, it's not too far away from where we're at right now. Well, from the projected target at 149.90, it's only about 10 pips away. So within that general range between 150 and 149.85, 90ish, that will be the sweet spot for the sellers. Now for the buyers, it's definitely some opportunities in there, but like Darren said, like you'll be hard pressed because you'll be trading against the trend. You can always get your trades and get your money, but just be cautious, be patient, be vigilant in your trades, and make sure you don't get caught at the wrong time. So I would say buyers, be very cautious. Sellers, go ham.
All right. There you have it. We're on the side of sellers and we're all in. We're all in. All right. So let's flash over to AU. All right. So I think I said in other streams, I believe GJ and AU possibly could be have positive correlation in terms of the direction it moves. Not saying it is, but we can possibly just see on the breakdown. But as far as for me, is me looking here, the head and shoulders is still valid here. And I feel like until we get a break of the overall head, higher highs and higher lows has not been formed. But let's not start on a lower time frame, because I told you guys we don't ever want to get stuck on a lower time frame when we can just move to the monthly and try to get a better picture of what's going on. So as we can see in this case, I feel like we could have another inverse head and shoulders going on here. We have a head, we have a shoulder here, and now we're just waiting for the second form of the second shoulder to happen before we get a push up. But if the market does respect the 65 moving average, look like the way it's doing right now, and have these wicks forming, this could be possibly a head and shoulders fake out, and that the overall direction is going to just be continuing down. Just the only thing that kind of really worries me, two things, is that this lower wick and then this wick that was just formed. This to me looks like a little bit stronger than this one, but this one just happened. So I'm not sure if this wick was needed to push it down before it continues up, or this was just like an overall just a rejection, and now the market is just going to overall now just push back down to try to retest these lows down here. I don't know. I'm not Mr. Cleo, but we're only going to trade what we see. And when we see what we see right now is rejection. No bodies of the candle has formed over the 65 moving average. Only wicks has formed through the moving average. So that lets us know that whatever's at that moving average is, acting and being really strong. Let's break it down to the weekly. The weekly, we kind of get like a better picture. We see that, there's some highs up here, and that this market came up here to retest these highs that was previously over here. But as you can see, we're getting rejection again the way we did over here. But the only difference between this one and this one is that this one, whatever's sitting here, made the body of this candle push back much further than this one. So it looks a little bit, the resistance or the support of this side is much stronger than this side. So, and if this candle right here is forming lower than this candle over here, this could be another head and shoulders formation, and that it's possibly telling me like this is the left shoulder, this is the right shoulder, and we're just now waiting for the neck of the break line, and we're just going to wait for it to come back down and touch the 65 moving average before we decide to take it up again. So I think for me, it's going to have like the same story like GJ, which is I'm going to have to stay on the side of selling right now, just because the biggest time frame lets me know that it's still selling, and until a level to the right, that shoulder, these highs over here are broken, is when higher highs and higher lows will be formed. So until then, sellers are still in control. The monthly, the 7 is below the 65, but the weekly and daily, the 7 is above the 65. And like I said, one or two things is either happening. Either the market is still retracing back, pulling back, retesting, or the market is now trying to begin to make higher highs and higher lows to go up. So I don't really see it breaking this left over here, these highs over here. So we can probably kind of respectfully kind of exit out the idea of higher highs and higher lows, and that we should be trying to introduce the levels, introduce the idea of selling, and that we're only pretty much trying to bring the market down just to the 65 moving average, because I just feel like ever since just down here, it's just really just been going up. So I don't want to just ignore the fact that it's just been in a steady flow up, but I do want to be cautious and understand that on the way up, the market does a lot of up and down. So maybe we can use this opportunity to catch the down move down here, or we could be patient enough and wait for the market to come back down here, and this will be our opportunity to buy. So like I said in plenty other streams, I wouldn't particularly trade this right now. I would have to stand to the side and wait a little bit more confirmation. But I can give you my ideas for both sides of selling and buying. So just for the sellers, the buyer standpoint, I feel like until you see probably the break of the 65 moving average, or even the shoulders, is probably when you want to even begin to think about buying, because the market has just been going up, making a high and just falling down. Go up, make a high, and just fall down. So I just feel like maybe the shoulders is broken. You can think about going long, but I think the head would be more of a confirmation of going long. We don't want to fight the trend. We want to stay on the side of the trend. And pretty much those are my thoughts for the buying. Selling, I feel like if we can get the respect of this 7 moving average and stay below this 7 moving average, I would agree we can definitely bring the market back down. We definitely want to buy low, sell high. So we want to wait for prices to push up as high as we possibly can. So we can hop in for the short, so we can just get everything in the middle while trying to get the bottom area. So I I feel like I don't see it, not say I don't see it coming back up to the shoulders, which I don't, but I do kind of see a level over here where these highs were. And I feel like maybe if it comes into this area and find support, rejects somewhere around the 77 3 area, 772, no, 773.75, 773 50. So 3375, 773.75, 773.50. And I want to stay, like I said, I want to stay closer to quarter levels. So let me hide these moving averages. So yeah, so if we can get prices to try to come back up somewhere where this wick is, this red wick that kind of just sticks out. Yeah, if we can get the market to come up into this blue zone right over the 65 moving average, I would definitely want to, this would be an area I would definitely want to try to hop in for the sell. Like I said, you can make money on both ways, but you just have to find yourself on the right side of the trade at the right time. Me personally, being that I'm the market is overall selling, I wouldn't try to waste any energy trying to catch long plays. I mean, you can, but you would have to just take profit really quickly, because I just feel like it goes up and then it just drops all the way down. Like it just has a pattern of doing that. Like you would have got in here, if you didn't take profit here, you lost it all down here when it came back down. Or if you didn't catch profit up here, take profit up here, you lost it again back down here. Or even up here where it shot up again. And you try to wait and it's like, oh, that joint going up more, some more. If you didn't take profit up in this area, you lost it all back down again, because it came all the way back down in structure. So with that being said, I feel like I want to wait for it to come closer to the 65 moving average, find rejection up here, and take it back down. Let me see if there's anything else I need to say if I pass the Tiberius. Oh, and being that I'm looking for a retracement for the selling, we want to see the retracement of or retest of previous lows. It looked like it's broken the lows right now, but the next candle was red, so this could be the rejection right here at the lows, and now it's going to begin to go down. So if I can't catch the short up here, I will come down to this blue level and try to hop in on the rejection up here and the break of the 7 moving average. Yeah, and that's pretty much my analysis. So Ty, tell me what you're thinking.
All right, so let's break it out to the daily chart and let's look at it from a clean perspective. Because, like you were mentioning earlier, just like GJ, AU also has a head and shoulders pattern that's forming. So I think our analysis could be very similar to what we said for GJ. And I think one of the things you pointed out was the fact that the right shoulder has also made a long tail candle wick. And I think on the higher time frame for AU, it was running right into the 65. So we already know from those levels that, like Darren said, whatever is going on up there is very strong and we're seeing rejection. So that means that now that we're looking at what's happened after that long tail candle wick, we can see that prices have kind of moved a little bit to the downside and continue moving down a little bit extra. So if we break it back to the hourly chart, we'll actually be able to see lower lows and lower highs actively being formed. And that's something that we like to see in downtrends. That follows typical market structure for sure. So as we can see, the top for our right shoulder, when we break it down, the top was located at 78.20. We had a huge push to the downside all the way back into the 65 moving average. Now, from that point, prices did pop back up above the 7 and the 65, but once they popped, that was about it. All of the initial up movement from the bulls was located during that one large candle to the upside, and then prices just consolidated for the rest of the time, and then eventually started drifting lower with lower lows and lower highs, which, because we know that the overall trend is down for the moment, lower lows and lower highs probably means that we can get some pretty good sell orders in if we catch it at the right time. So now that we're still in that same process, we just want to look for levels to the left that could potentially be key levels of resistance. So for me is the 65 moving average. I think that should definitely be a dynamic level of support because if we follow it across, it also lines up with previous consolidation tops from the 21st, April 21st, not too long ago. So I think as long as prices don't break back above the levels that Darren was talking about earlier at 77.30s, within the 77.30s, as long as we stay below those levels, we should still be good for the long side. Excuse me, for the short side. The only thing that concerns me right now in terms of what could possibly be in the way of a short trade is the fact that the overall trend, if you look at it, it still could push up just a little bit. I don't know how much room it has left, but I don't see it out of the possibilities that maybe it could move 50 to 75 pips based on what we were seeing on the monthly and then find rejection. So, and also, if we look at where we're at right now, we're finding support at the 77 cents level. We haven't been able to break past those levels on any of the occasions that we tried. We tried the first time on the 15th, we tried again on the 19th, and then we had a pretty good period of 3 touches from the 20th to the 21st, and now coming back to the 22nd, we're still hovering above those 77 levels, coming back down to them, but never being able to break through them. So once we break past those levels, if we ever do at 77 cents, I think that we are definitely all the way on board for the short trade. But you know, like me and Darren always tell you, you want to go short from higher prices. Buy low, sell high. So when we're on the selling side, we want to sell from higher prices. So I would go back to that overall area of 77.30. For me, that's the sweet spot. And then I would probably put my stop at about 77.60, right at the top of the right shoulder, because if prices get past that level at the right shoulder, then we have no business being short anymore. I think that's a fair trade for all of us, and it might work out if everything lines up. So that right there wraps up my analysis for AU.
All right, let me see if there's anything else I need to say before I pass it over to Tiberius to get his pairs he want to go over for the night. I think honestly though, I don't really see it going back down. I really kind of just see it going up. Just because it took so long for it to break over here. It took forever to break over here, and then once we finally got the break, it just went up and went crazy. So, honestly, I probably just see it just, it actually, this wick came down and touched this low down to the exactly. So, being that it stretched down so far and maybe it had a point to prove or something, I feel like now we could possibly be expecting the market just to just be moving up again. So, let's just see how it plays. All right, so let's pass it over to Tiberius and let's get his pairs.
All right. Can everybody see what's going on here?
Hold on. Yeah, we see you.
All right. So tonight I want to start off with the Dow Jones, aka the US 30. Now, we had a very interesting day today because we had a little bit of unexpected news coming from the presidential office. Now, this wasn't scheduled, it wasn't planned, it was just a random tweet, a random announcement. But basically, President Biden has said that the capital gains tax will be increased to a maximum of 43%. Now, that's important. If you don't know what capital gains are, that basically means capital represents money that you invest into the market. So if you make any type of profit off of that, you have to pay capital gains taxes in the United States. So depending on how long you hold your trade, those capital gain taxes can either be lower or higher because you have long-term capital tax gains and you have short-term capital tax rates. Long-term is beneficial, meaning that you hold your investments for more than a year and a day, you actually get taxed at, I think, about 15%. So that's a really nice number in comparison to what it would be if you sell your positions for less than a year and a day, which means that if you sell it on a short-term tax, you pay ordinary income. So let's say if you have a lot of money and you're already in a higher tax bracket, it benefits you for your long-term capital tax gains to be lower. But what happened is they plan on raising those taxes up. So all in all of that tax stuff, don't let that confuse you. Just know that if you get taxed more, you make less. That's it at the end of the day. And that sent the markets crashing down because, well, not crashing, but just, an unexpected drop because people weren't expecting that. And here's a lesson right here. Anytime the market shows you something that's unexpected, expect volatility and expect the markets to panic. When bad news comes that people were expecting, it's not a big deal. But when bad news comes that wasn't projected, things can happen. So with that being said, let's go ahead and start our analysis for the Dow Jones with all of that information in mind. Now, from the daily chart, nothing has really changed. Even though we had a down day today, we really just came back to a level that has been support before, located down below at these wicks at 33,725, and as well as the bodies located around 33,800. Those were the same levels we were telling you guys about on Tuesday. So I hope you guys were able to do something with that information. But all in all, it's really just a pullback on the daily. But we don't want to let that fool us, so we'll break it down to the lower time frames and see exactly what's going on. Now, this is where I become concerned. So let me show my support and resistance levels. So what I'm seeing is initially a double top that started this down movement. From that point on, we've seen lower lows and lower highs all the way back down to the 800 level. This is where we were at on Tuesday. Now, we respected the 800 level. We popped back up. But look at what we came back up to. We came back up to what used to be previous resistance, and the sellers took back over at that point. So that tells us that this level up here, 34,200, is very important. So we can actually go ahead and mark that level up for future reference. 34,200. Make sure you guys put that level on your charts. So now that we've had a rejection from that level, not only did we have prices move lower, but look at the momentum that they move lower with. One thing I know about the Dow Jones is that whenever you see a red candle that's this significant, expect lower prices in the future after a healthy pullback. So in order for us to determine where prices could reverse, all we need to do is look to the left, find the last low. Last low is located right here at 33,975. Right here at these two wicks. And if you follow these to the left, they also line up with levels that used to be resistance on April 20th and also used to be support back on April 19th. So we know that these levels are very important. But I honestly would say that would probably be best case scenario. We see prices come back up to these wicks. But I wouldn't be surprised if they stopped at the zone, because if we follow this zone across, it also lines up with a previous wick that has held up as significant on the chart before. But overall, man, I would say in the long term, I'm looking for the uptrend. But in the short term, like right now, tonight and tomorrow morning, I have to lean more towards the short side. But I don't want to ignore the buyers, because I think that they could have a pretty strong case in this argument too. Because if we look at this chart and we pull it out to a bigger picture, like I was saying on the daily chart, we really just came back to test what used to be support levels at 33,800. Those support levels have held up and we're moving higher. So I think, here's my thing. If we get above the zone at 33,900, it's up in a way the bulls are in control. As long as we stay below this zone, though, we have to be cautious and we have to respect the selling side and potentially take short trades if they do present themselves. But let's not forget that the overall trend is long. So we can take some short trades in the moment, but overall, we want to get in and get out with that and then focus on the longer term trade. So above the zone, good for the long. Below the zone, good for the short. And I'll keep it short. I'll keep it short and sweet on my analysis. And let's pass it to Darren. Let's get his thoughts on this
one. So just how, like you said, the overall direction is up. And this is the Dow Jones, the US 30, which is a representation of the 30 biggest firms or something like that in the country. And honestly, when you think about it like that, I wouldn't expect it to be doing too much down movement anyway, because if the US 30 drops or goes down a lot, that means the economy as a whole is not doing well. And I highly doubt that anyone's going to let that happen. So with that said, I would just still have to just stick with the buying on this one. When I look at the daily, just looking at it right here, it looks like the green candle that's forming right now has aligned with a previous high over to the left where that wick is. The green wick, yep, it formed right down below it, right where it formed at. So I feel like if we can get prices to stay above that area where we are right now, I'm all in for the buy. But if the moment it begins to push down below that area, I would have to follow suit and take it short. Go to the weekly, unhide the moving averages, and go to the monthly. Yeah, like I feel like maybe we could be forming something what we did back in 2018, because what we kind of look like the setup, that the way that candle setup is, that candle right where we Tiberius has the mouse on kind of looks like the same thing. And if that's true, we can probably expect the market to be possibly pushing back down, to come down, to test prices down at 3,000, or maybe even lower, down at 28,000. That's a little far fetched, but that's just to retest previous highs that it broken out of. Um, I do also do believe that at 3,000, where that red candle formed its high, I think the next candle, not the next one over, but the one after that one, that candle came down to retouch that high. So that was probably possibly the retracement that it needed to continue up. That doesn't mean it's valid. Go down to the daily. It doesn't mean it's valid, but it did look like it touched the previous high. So um, it the index is one of those things like you don't want to bet too much on the other side just because this pair is just known to go up. It doesn't have too much history of it going down, or even the 20 being below the 50 for too long. So it's just we got to keep that in mind and understand patterns and trends. So I would have to stay on the side and buying. Go down to the hour. Yeah, if I can get prices to break those wicks over to the left, where that left shoulder is forming. No, no, no. Go to where we are right now. The highs. Now follow it out. No, no, no. I don't know. I shouldn't say highs. Go to where we are right now. Right now, slide that price all the way over to the left. Right there. Stop. Move it over just a little bit. Right there. If we can get prices to break up a past that, I feel like that would be kind of considered breaking quote unquote structure, even though it wouldn't be. But that's would be an area I want to see get broken, um, and begin to go up. Like I said, I don't feel like the sell is going to happen for too long. That if it does sell a lot on a lower time frame, but on the higher time frame, no, it doesn't. Probably because that down movement alone is just enough. So if I'm going to buy, I definitely want to buy somewhere around these lower. Yo, you seen that?
What?
My joint just flashed. It's crazy. Um, I might probably should be covering this journey possibly, but no, I'm not gonna do that. But yeah, if I can get prices to break past, maybe not even over now, move it back over to the right to where we are. Now go over to those wicks right there. Yep. So yeah, if I can get price to break above those wicks, come back down and retest it and stay above it, I'm all in for the buy. But if my entry would be there, but then I would put my stop loss right underneath structure, the bottom of the figure. And if that's broken right there, I have no business being in this trade anyway. So I definitely want to see. I'll go down to like the 30 minutes. I felt like I seen like a bullish engulfing candle. Go to the 15 minute. Okay, so yeah, if it doesn't break those wicks right to the immediate left of it and stay below those wicks, I'm for the short. If it breaks those wicks, comes down and retest it, I'm all in for the buy. But I feel like more so Just that drop just worries me because I just feel like that drop was so big. And like you said, Dow Jones, and anytime you see something like that, we can be expecting prices to go down. And that's a huge drop. So uh, I'm sorry, guys. I can't. I'm sorry. I can't. I have to kind of like follow suit with this one and just temporarily go short to set up for the buys. So I want to buy in at the bottom of structure. So I want to see prices come up to hit the 65, bring it down to structure, and hop back in at the bottom of structure. That's going to be my story, and I'm sticking to it. So I want to be on the sells right now for immediate, but I want that sell to set up for the buys to continue to go up higher.
Okay, there we go. So that wraps up US 30. And one thing that me and Darren both mentioned that I'm talking from experience when I tell you guys about this candle right here, because that right there represents my favorite setup. It doesn't happen often, but when it does, all you got to do is wait for the downtrend to continue. It's about a 75% chance that it works. But use proper risk management when you trade these trades. Don't put everything into it just because we said. Always practice smart trading, responsible trading. So that brings us to our next pair that we have coming up on the docket, which is the good old reliable dollar Swiss pair, which has actually been moving pretty recklessly this week. All right. So let's start on the daily chart. So from what we can see from the daily chart, well, actually, let me start at the weekly because I want to show you guys what the overall trend has been since around 2019. So if we follow this all the way back up to April 2019, we had a high at around $1.02. Ever since that period, we've been moving down, 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 and down, making lower lows and lower highs for about a good solid 2 years. It's April 2021. This happened in April 19. So the overall trend is for sure down. Now, in every downtrend, there will be retracements where the buyers get strength and they step back in and they push the market higher. And that's what we saw at the beginning of the year in January. We had this inverse head and shoulders. And from that point forward, we had higher highs and higher lows until we got back up to this point at 95 cents. Once we hit these levels, we have seen nothing but selling for pretty much this entire period from the beginning of the month on April 1st. We had a bearish engulfing, right? We continue all the way down. We had all red candles back down to the support level. We bounced off of it for a little bit, made a lower high, and continue moving lower. So we're in the process right now of putting in a lower high. Because remember our market structure lessons that we always teach you. In a downtrend, you want to see prices come back and test what used to be the last low. You want to see rejection from those levels. So if we look to the left, the last lows for these charts are located at 91.90 and 92 even. So about a 10 pip range between 91.90 and 92. Notice how we came down to a low of 91.35 but flashed all the way back up for this wick to test those levels within that general area at 92 cents. And from that point, we've moved up and down. We made a doji candle on this last candle that was printed. So doji represents indecision, but typically when you see a doji candle and a trend that's this strong, it typically likes to follow the direction of the trend. But you always want to wait for confirmation so we can break it down to the lower charts to find exactly what that will be for us, at least tonight. So, and as we can see on the hourly chart, the lower lows and lower highs are just ridiculous. This is one of the strongest trends that I've probably seen so far this year. And we're right now coming back up into resistance, like I was telling you guys, at 92 cents. Now notice how this price action formed. We had a lot of bullish momentum. If you look at these green candles that brought us up into this level, the buyers were there, but they didn't have enough strength to break past major resistance. So that tells us that the sellers are still strong. Now we've had prices push lower. We made a lower high. Now all we need to do is make another lower low and we're all good. I would expect prices to come back down and eventually test the bottom of structure. Only thing that concerns me right now, let me pull up my support and resistance lines, is the fact that if you really wanted to, you could kind of see a little bit of bullish activity starting to happen towards the bottom of this pair. Let's clone it. Now, I'm not saying this is the best buying move ever, but we have to understand that as sellers, every time is not the right time to go short. We have to respect the buyers and let them play out what they have to. So I honestly will wait until prices came back up to retest the top of the channel and then look for prices to move lower, because I feel like right now they're just a little bit too low for my liking. Because if I'm looking to take prices back down to the bottom, I don't want to, let me hide this. Let me just give you guys a overall picture. Consider this the bottom, consider this the top. We're closer to the bottom than we are the top. We're really kind of in the middle a little bit. That's not the place that you want to trade from, whether it's on the long side or the short side, when you're in a consolidation zone. When you're consolidating, you will either want to get it from the top or the bottom, but never the middle. So if we bring our channel back up, our top is represented a little bit higher up. So I would say maybe 91.80, 91.75 would be my entry for the short trade, and then I'll look to take it back down. Put my stop right above the highs at 91.90, and that's how I would call it. First, I want to check the 4-hour to make sure that we didn't miss anything. Now the overall trend is down, so let's check the 15-minute. Yeah, man, everything right now for me points to the downside. So that's pretty intriguing. But let's get Darren's take on this. Let's see what you have to think about it, my guy.
Okay, go to the monthly. I just feel like being with this pair, I feel like it's kind of a bias for me, just because I've seen you watch this pair for so long, and you know this direction of this pair, and we know it's known to go down, and we know after certain levels, especially when it comes back up to that dollar area, it wants no parts of it. It gets up out of there and either consolidates or it goes back down. So for me, I would kind of just have to follow suit and understand that the overall trend is down. The 7 is below the 65 on the monthly. Go down to the weekly. The 7 is below the 65 on the weekly. Go to the daily. The 7 is above the 65 on the daily. So this tells me that we're still in a retracement phase, and that we need to stay on the side of buyers. So for me, I would definitely want, like Tiberius pointed out, we definitely want to, since we're in a down momentum, we're waiting for a retracement to the last low. And the last low area is somewhere around that 92 cents area. Yep, that 92 cents area. So I would want to see prices come back up, hit that low, respect it, and then move its way back down. I feel like I wouldn't want to think about hopping in until moving averages are broken, higher highs, higher lows are being formed, and important high areas to the left are broken. Until that happens, I will have to stay on the side of the short, drop down to the 4-hour. And it seems like on even the lower time frames, just been making lower lows and lower highs and kind of just playing the market. I mean, the moving averages. So, for me, I'm going to stay on the side of the sellers, and being I'm on the side of the sellers, I want to try to wait for prices to come up a little bit higher, to come back up to that 92 level. We can get price to come back up to that 92 level. Even this little high over here, right over here by March. Nope. Now come backwards. Go backwards. Right there. That area where the market, if we can get price to come back up to that high and respect it, I'll take it back down. But if it breaks that high right here, then I would have to think and rethink that low area and bring it up to the lows in the middle. And if it comes up to those lows and turn back around, then that would be valid as well. So anywhere between those lows and that high and those lows over to the right, we should be good. But I'm all in for the sell on this one though. I can't really advise too much for the buys. Like I said, you can make money in any market in any at any time, but you, like I said, you have to be on get caught on the right side of the trade at the right time.
Exactly.
So with that said, I'm all in for the short.
Timing is everything. Patience is everything.
Yeah.
All right, so that wraps up our analysis for dollar Swiss. We're looking for the short trade on that one, being patient, waiting for our setups. And that brings us to a new segment of the show that we want to introduce for you guys. We want to call this segment Exploring the Markets because it's more to the markets than just, US 30, GU, dollar Swiss, and AU. We want to make sure that we give you guys an inclusive look into the market and show you all of the things that you could potentially trade because certain things are for certain people and certain things are not. And if you guys have been following the news lately, you know that one thing that's really been going on lately that's been popping off has been Dogecoin and other cryptocurrencies as well. So tonight we just wanted to dive into that a little bit. We gave you a little bit of analysis on Tuesday about Dogecoin. So we wanted to follow up and see exactly what's been going on since that time period. Now, like we were saying on Tuesday, Dogecoin is very volatile and oh my goodness, it's been
What,
moving since the last time I checked.
what did we say?
Oh my god. So yeah, I mean, before I got onto the show, maybe a couple hours ago, prices were at 25, 26. They're back down at 20 once again. And that happened within the past 2 hours. So let's start at the daily chart. I want to just build on what we did from Tuesday, so we'll keep it short and simple. Like overall, if we're looking at the chart, we can see that from the beginning, Dogecoin had very minimal volatility when it first started. It came in the pennies, and then it played around for a while until recently, February. That's when it really started to move. Now, the overall top was created at, I want to call that 45 cents at these tops. Notice how we made a double top at these levels. It's a little bit hard to see with the candles, so we'll switch it to the line chart. This was our double top right here. We can't see the wick, but it is there. So after a double top, we know that that's one of the most significant bearish reversal patterns that you could see in the market, especially if it's followed by selling that comes after that. And that's exactly what we saw. We saw 1, 2, 3, 4 straight selling days where prices had a crazy drop. 64% drop within the span of 1 week. So it's lost more than half of its value in less than 7 days. So that's what we were talking about when we were saying that this will be a very volatile pair for you to trade, which can either hurt you or grow you, depending on how you trade it. So I would say that from this top, we've been making lower lows and lower highs. We were talking to you guys about support maybe at 24, 25. Remember how we talked about those quarter levels on Tuesday? We did see support at the 25. So if you guys were able to catch some long trades off of that, I applaud you. I hope you were able to take profits though, because things turned around very quickly and came back down, eventually broke past 25 with extreme momentum. Let's pull up the volume. So as we can see, we had extreme high volume on these selling moves. So that's telling us that the sellers were very strong in their convictions. Now, we've had a little bit of a pullback right here. Long tail candle wick is starting to form. But we can't really say too much about this candle until it closes, because as volatile as Dogecoin is, this candle might look completely different when the candle actually closes. But overall, I would have to lean towards the short side. I know a lot of traders don't have platforms where you can trade the short side, but if